First, the latest trade data of China shows a slight increase in imports and exports for the first 7 months of the year. Official data showing total imports and exports expanded 0.4% from January to July to about $3.3 trillion. Exports growing 1.5%, while imports falling 1.1% from a year earlier. Cars, refined oil, bags, suitcases were among the exports that grew. There were more imports of paper pulp, coal, and vegetable oil. For a closer look at all this, we're joined by Qu Qiang, Assistant Director of the International Monetary Institute in Beijing. Good to see you and welcome to the show. You know, these numbers, a lot of people have high expectations for what's happening in China. I know some people want perhaps stronger numbers. What is the latest situation there?
Well, I think this is actually within our expectation, because if you take a look at the backdrop of the whole world and also domestic economy in China right now, you can think this is actually a reasonable outcome we've been seeing. And I think there are several things that actually make us a little bit worrying. One thing is that export. The export of China is actually a weather meter, not only for China, but also for the rest of the world. You've been seeing the Dow Jones number are dragging down by this number coming out in America, and also been seeing the 10-year Treasury bond price and the yielding curve has been dropping as well in America, and also we've been seeing that many analysts are worrying about what does that mean? It means the demand of the whole world has been shrinking. Because if you take a look at the productions in China, and the demand has been shrinking for Chinese products. And also, I've been seeing the situation been slowing down in Chinese domestic market. That can be a bit worrying. And also, I think there also are shining points in there as well. For example, if I take a look at the export structure in Chinese economy, you've been seeing that the labor-intensive products has been reducing in export share, but also the mechanics, electronics, and also automobiles, and it's been increased in the export shares.
Right.
I think that reason has been repeated in Japan in the 1970s and 1980s as well, when they try to shift gears and taking to a higher, ground in the economy.
Yeah, I mean, I guess what I'm getting to is, post-pandemic, a lot of people had very high expectations. I suppose it's not fair to say this person's expectations is any better or worse than another, but they expected a very big bounce out of China post-pandemic, and we haven't seen that to the extent that we saw in a lot of other places. And some people are asking for Beijing to perhaps put in more stimulus, or put in more stimulus to help the manufacturers or real estate and a variety of different areas into China. And I'm wondering, do you feel the same way, that Beijing needs to do more, or perhaps they don't?
Well, for me, I think China has a very special situation than the rest of the world, because China is the largest producer of the whole world. And basically, we're like one phase, after the whole world, because China, reopened later than the rest of the world. I think in several sectors, China already showed the same rhythm like the rest of the world has did in 1 year ago. For example, if you go to the hospitality industry, hotel resorts are full of people. This is really, really hot, and you can see the service fee and the cost are going up very quickly. But also because China reopened one phase later than the rest of the world, what you have seen right now is that the oil prices already dropped. Raw materials prices already dropped. And also the whole world start to see the recession in many places, in European Union and partial in American market. So the demand has been shrinking. So when China reopened itself, have already seen the peak has already been going after that. It's going beyond. So the demand has been shrinking. So when China's factories are full opening, they didn't see the orders coming like they expected. That is the reason why the service sector is hot, but also the manufacturing sector is not as hot as we expected. So that's the reason why you see the export has been dropping very quickly. And because the export is dropping and the order is not coming as expected, so people's salary and income of factories
Right.
is not come as we expected. That's the reason why.
If the orders aren't coming as expected, are you saying that the orders are going somewhere else, or they're just simply less orders? And which countries are we talking about?
No, the order actually does not be shifted to the rest of the world as we expect as well. We've been talking to our friends and also the investigatees factories in Vietnam and Mexico. Yes, comparing to themselves, the numbers are growing. but still comparing to the history data, you find out that actually the whole world trade share has been reduced, which means even though certain share of the manufacturing or the product has been shifted to ASEAN countries, to North American trade zone, but still the whole demand, the sheer data has been reduced. So this has been a warning sign, not only to China, but also to the Wall Street, but also to the European Union. So this is something we really need to worry about.
Yeah, well, look, the rest of the world obviously watching what's happening in China very closely. China watching the rest of the world very closely. I guess that's the global world that we live in today. Qu Qiang,
Exactly.
thank you very much from the International Monetary Institute.